Hey everyone, this is Chris. Welcome back to the channel. So we're talking about the markets and news around the world. Try to figure out what the heck is going on and hopefully help us navigate together because the market is uncertain, but you know what is certainty? That we can rely on each other. So let's take a look at some stuff here. First, Goldman is saying, you know what, stocks could still come down further. I agree with that, mostly because I've been watching these and I want you guys to watch this stuff as well. This is the Buffett indicator. So the basic gist of it is you take the total market cap of all stocks. So say how much are stocks worth essentially, and then you divide that by the GDP and you come up with a number. And as of now, we are 33% above the trend line. And you could argue that we're overvalued, but here they're saying fairly valued, but 33% above trend line. I could say you're 30% overvalued, right? So, but this is sort of like one way to measure it. Another way to measure it as well is the Shiller P ratio, which is something we talked about before. Now, remember, Shiller PE is basically inflation adjusted over a 10-year period. The basic idea of PE, if you don't know, is the price of stocks in relationship to how much companies earn. And these are good indicators because these are ratios, right? And the trend line for this one has been around, 17, 16, something like that, mid-teens. Right now we're trading at 29. I've always said the market will get interesting when we hit mid-20s. We don't quite seem to go there. We know the peak of this thing is like 45, so we're well below that. But I still think we're trading very, very expensive. You could argue double expensive if you're, an extreme bear. You could say, yeah, we need to go down by double. But also just pay attention to both this one and the Buffett indicator. It gives you some general gist of sort of where we're trading. Also, too, in regards to what's going on around the world, we'll start with Asia. So Samsung thinks that the chip sector is going to be slowing down the second half. They originally were bullish. And now the reason why they say this kind of stuff and the reason why you pay attention is because companies have to make plans of like, okay, are we going to invest in new chip designs? Do we think there's going to be customers? Because, if a company spends a ton of money researching something and then there's no buyers, it's like horrible, horrible planning, right? And so you do want to pay attention to what big companies like Samsung say. And this actually relates to sort of what's happening in China. Basically, demand is slowing for exports from China, that is. So basically, customers in the USA and in Europe are not ordering as many things from China. And this, remember, we're all connected. And so this will certainly affect what's going on in China also as well. Demand is slowing down in China as well because the Chinese people are on lockdown. I believe it's Chengdu and Shenzhen. I used to live in Shenzhen, so I'm familiar with the area. So it's two major cities in China are essentially locked down. So their demand is going to go down. European demand is going down, and U.S. demand is going down. So we have all these things going on. And again, Samsung is giving a warning as well. There is also, too, essentially the SEC is still kind of concerned whether or not the Chinese companies will follow U.S. regulations in regards to their accounting transparency in the market. So whenever you see these kind of articles come out, it's just the USA signaling, okay, we're trying to get this to go through, but like, China, dude, we're serious. If you don't hold your end of the bargain, we're going to be like kicking you off. And if you guys understand what the basic gist of it is that if companies trade on our markets, right, we believe in full transparency, financial records, all these things. And there's a couple sticking points. One is we just kind of want to know which government officials in China have what financial connections to which companies. We want to know that. Also, too, we want to know which companies in China have connections to the Chinese military. We want to know that. And so China's always been really reticent of sharing everything because certain things are just sensitive material. Politicians generally don't want everyone to know where their money is tied up or which money in which companies do they benefit if certain companies get contracts or et cetera. You guys get the gist of it. Just politicians want to keep their, especially in China, want to keep their financials private. So that is a sticking point, and we'll see what happens with that. The negotiation was they're going to do like neutral sites in Hong Kong, but the reality is a true audit would be a third party like we'll say Price Waterhouse goes to on site at the headquarters in Tencent, say in Shenzhen, and like goes through everything, right? But they said no, we're not going to do that. We'll just do Hong Kong and just trust us. We'll see how that goes. In regards to China, which is the second largest economy, Nomura is cutting their GDP estimates. You're going to get a lot of this kind of stuff, which is essentially either GDP cuts or company earnings revisions, meaning that the big Wall Street banks or even the companies themselves will say, you know what, we just don't think we're going to make that much money this year because of all these things going on, slowing demand, rising energy costs, all of these things, right? And this is sort of like, if you want to understand why I showed you the early market indicators first, is you always want to know sort of where we're trading. Are we trading expensive? Are we trading cheap, etc.? The Buffett indicator says fairly valued. I still think we're a little bit expensive, but I definitely don't think we're cheap. And I don't think anyone would say that right now. And this is sort of how you do well in the market is, right, buy low, sell high, and you just have a general sense of where we are, because stocks aren't all going to go to zero, right? Some will, but like something like, we'll just use the example of, I always use Apple. We'll use another example. So let's use Microsoft. I like Microsoft. Microsoft's not going to go to zero. They're still going to make money. They have a real business and stuff like that. And the question is, you want to get into that essentially business. You're buying a piece of ownership in that thing, and how much money are they going to pay you for owning that thing, and how much reward are you getting? You don't want to overpay for the amount of profits that they get, or you don't want to overpay for the cash flow that they have. So that's sort of what's going on with this. And so when you see cuts on the GDP of China, it sort of gives us an overall mood of what we think the future is going to be, because stocks trade on. So an investment is how much we think something's going to be valued in the future. Also, too, it's just kind of an interesting one. The yen just keeps falling. It's at, a 24-year low against the dollar. And if you guys know, we moved to Korea, right, which is, obviously Korea's between China. And it's a good time to be abroad if you're an American. If you got dollars, go abroad. Everything's like crazy cheap right now. It's kind of crazy time. And it's funny, true story. I first came to Korea. This was back in '09. It's like 13 years ago. And, I come back again when the dollar is really, really strong. And this is just how it is. If you're interested in travel abroad, now's a good time. Although, one of the things this is very real is just COVID is a big problem. I mean, you guys know that. So hopefully that'll end soon, and we can open up travel even more. The other thing too that happens is when foreign currencies fall, people start piling into the dollar, because who doesn't like dollars? I like dollars, right? And so dollar tends to be pretty good right now, and you'll notice that dollars are going up and other currencies are going down. One thing that's really interesting is that we have a lot of uncertainty in markets. However, for whatever reason, and perfectly frank, guys, I just don't know that much about Indonesia. I know a lot about a lot of countries, but Indonesia is one of those countries I don't know that much about. We've been to Bali, which is great. And for those of you who've been to Bali, give a shout out to Bali. I'd love to hear you guys saying that. And I've been to Jakarta just very, very briefly, but we mostly spent time in Bali. But for whatever reason, their markets have been doing really well. I don't know enough about Indonesia to make much comment on that. I will say, though, I do think there will be growth in India and in Vietnam. I know those two are two hot ones, and maybe Indonesia. And if I learn more interesting to say about Indonesia, other than it looks like the market is growing, I'll let you guys know. But I just wanted to point that out, that not everything is like sinking. Whereas like something like Japan is an interesting one, because they have this crazy thing where they're just not growing. And they're like not having enough babies in Japan. It's like a real problem. The economy's not growing. They're not having babies in Japan. And the other issue is too, as the economy ages in Japan, if there's any change in like energy prices or food prices, it really kills the regular Japanese citizen. Why? Because they're so old that a lot of those people are living on fixed income, essentially, right? So basically Social Security, that kind of thing. And there's not enough workers to pay for that. It's a whole mess over there. And this could be a theoretical problem that happened in the U.S. someday, where we just don't have workers to pay for people on Social Security. And when you get all these people on fixed income, it creates a lot of problems. And speaking of the, raising energy costs, et cetera, I still think we need to like figure out a way to get out of the stranglehold of OPEC. Because OPEC, you hear this stuff, time and time again, like, are they tightening supply? Are they, expanding more supply? What are they doing? They basically can manipulate energy costs whenever they want. So again, they're going to cut production. The basic gist is that obviously they want to keep prices up, right? So their goal is to always like make as much money from us as we can. My goal is to just like say, let's just get it out of the stranglehold of OPEC. But that's what they're up to. They're cutting production cost. Also, too, which is kind of interesting. When you talk about energy, we talked about how it affects, let's say, Japanese people when they're on fixed income and energy goes up. It really kills them. European metals industry is under pressure is actually quite interesting. So as it turns out, if you're like in chemicals or steel or anything that's a really energy intensive, when energy prices go up, it kills your company. So that is a very, very real thing. And, for example, if you want to build airplanes or say, for example, build solar power, any of these kind of things. And that's always a kind of a funny one where people say, Chris, alternative energy, something like solar power isn't that great because it takes a ton of energy to make that thing. And you're not really conserving energy. And I always think I get that argument. I mean, I really do. But I think the idea, though, is that you're trying to use energy now, build that infrastructure so you don't have to necessarily use so much in the future. But however, if energy prices are so high, I'm just not just talking about solar power, but just say aluminum or steel, which is another one, it really, really slows production and makes it difficult for them to operate. That's just the reality of it. So keep an eye on this, and we'll see if energy prices go up, if then, well, a couple things happen. One is you could say the price of aluminum will just say skyrocket because there's not that much of it, or the problem is that no one can afford to make any, so there just isn't any. So those companies struggle. So there's always a balance between that. So don't always automatically assume that one thing is going to happen, because someone asked me about the steel industry recently. So I think that's an interesting one. I do think, though, if you are going to be in that kind of stuff, I would say long term, and I can't tell you like today, tomorrow, next week, I would say long term, I would make a bet on lithium. I think lithium or even copper, anything to do with batteries. I think that's going to be a real thing going forward. So that's my opinion on that. Bank of England is kind of interesting, and you'll hear this as well. It's the same for us. They're saying that they're raising. Actually, they're having crazy inflation over there, and so they're raising interest rates the same way we are. But they're saying They're saying the same thing that I've been said as well. Is whenever the Federal Reserve say here raise interest rates, or the Bank of England raise interest rates, it takes a little while for those to like kick in and to get a sense of what it's going to do with the economy. So this is sort of another uncertainty of stocks or the markets or our economy. You just don't know exactly, right? You're trying to control inflation. You raise interest rate, but you don't want to raise it so much to where it kills the market. And if you don't understand exactly, the basic gist of it is that you always want to have some sort of economic activity to make it that companies can borrow money, consumers can come in and financing, people can buy houses, right, with finance money, et cetera. You got to have something. But if you raise the cost of money too much, it really slows things down. But if you keep the cost too low, too long, you got inflation, which we got now. So there's always a balance in that, and that's sort of how the game is played. I've been saying all along, if you've been following this channel, you will know that we need to have unemployment to fight inflation, right? And you're going to start to see this with the big companies, which we've been seeing all along. Like I said, we've been talking about this for a while. Google's now saying they may be well, the way they phrase it is they want to be 20% more efficient. They're not really phrasing it like we're going to fire 20% of our people, but the basic gist of it is that they're going to try to streamline, right? So be it combine teams, let people go. Usually the people that get here first and these kind of things are usually the freelancers and that kind of stuff. And actually Google uses quite a lot of freelancers. True story. I've had meetings with Google employees, and it's kind of funny. They're not even U.S. based at all. And it's funny actually. I want to say, you know what? It was Philippines. I was going to say it was Indonesia, but it was a conversation with a Google employee in the Philippines, and this was actually over business on YouTube kind of stuff. It was really quite interesting. And now that we're talking about this, it was kind of funny. Google was trying to sell me something related to YouTube. I can't remember what it was. It was like some sort of YouTube store thing that they're trying to do. Just sharing that. I don't remember exactly what it was. I basically they wanted me part of a pilot thing. I looked at the thing and I'm just like, I don't know why I want this thing, and ultimately said no. But point being, though, which is the main point, is that Google has teams all around the world. And in this situation, it was someone from the Philippines. It was also very nice. I think people who work for Google generally know they have a good job and very lucky. And actually, also another true story. I was on the plane, I want to say maybe 10 years ago. It might have been longer than that. But this was actually before, because I remember this is before we all had Gmail, when Gmail was by like invitation only. And I remember I met a Google employee and I was like, hey, can you get me that Gmail invitation? I really like Gmail. So it's funny. So for those kids out there who are too young to know, there was a time when we didn't have Gmail, and it was like really cool to get it. So just share that with you. Also too, which is funny, well, not that funny, but in California, they're going to be having power problems. In fact, I guess it's a combination of just really, really high temperatures, lack of energy, and people are just got their air conditioning tuned up. So this has also been an issue as well in Europe, just as costs go up and there's just not enough energy to go around. So if you've had blackouts in your neighborhood, I'd love to hear in the comments these kind of things. So we're in Korea. We haven't had any blackouts to my knowledge because of lack of energy. We had blackouts in the southern part of Korea due to we had a typhoon recently, but not in terms of use of like, not having enough energy, and energy is too expensive. So I'd be curious if you guys who are either in California or in Europe or wherever you are, if a blackout is a thing. I do know in China they're having blackouts. That was in the western part. I think one of the reasons it was like something with the drought, and they have a lot of water power, and the heat is really high. Everyone's got the AC on, and like they were having blackouts like 2 hours a day. It was like a rolling blackout where everyone has it for a couple hours a day. So that is a real thing, guys. Energy going forward is a real thing. And then the last thing I want to mention as well, and this is just the truth. When people get scared, they run to the dollar, and when people get scared, they do run to the U.S. market. So, regardless of what's going to happen in the future, I can't tell 100%, but our companies aren't going to go to zero, right? Apple's going to make money, Microsoft's going to make money, Netflix is going to make money. Now, how much money they're going to make, I can't tell you, but they're going to make money. But how much is an interesting question. And so one of the things I always emphasize over and over again is, just pay attention to P ratios, figure out where the Shiller P is, watch the Warren Buffett indicator, and just have a general sense of where you're on the markets, right? I can't tell you exactly this is the exact bottom of that particular stock, but I can tell you like generally what to look for, and that's why I always mention these basic things. And so if you understand where the economy is going, which industries are going what, and sort of what is affecting the supply and demand in the market, you're going to do great. And one of the things that I just want to sort of do these updates for you guys, because one, I think it's great to learn the markets, and two, I don't want you buying at the top. So when people say, hey, you should just buy all the time, buy every week, I personally don't think that's great advice. I think it's better advice is have a general sense of where we are on the market, and when things start to get attractive, whenever that is for you, is to tiptoe in, right? Don't necessarily have to throw all your money in, so I'm fine with that. But also, too, on the reverse side, know when that things are getting like a bit expensive and it doesn't look like you're getting good deals anywhere. So that's why I don't think like, hey, just buy all the time every day. Not always the case. So anyway, love to hear your thoughts on these things going around the world, and always appreciate your time. Thanks again for watching, and I'll catch you in the next video.